Session once again. Welcome back everyone for the analysis of Nifty and Bank Nifty using Bookmap's order flow tool and powered by TrueData. So thank you so much for your time. One thing I wanted to give an instruction before I proceed. So please make sure that you interact with me whenever I ask a question. Please make sure that you interact with me using the live chat option, or if you are in a Discord, so there is an option to interact with me by using the chat option at the right top corner. Use that option to interact, and let's make this entire session as an interactive session. All right. So a quick disclaimer: any information that I'm going to share from now onwards are going to be an educational purpose information only. Don't consider it as a buy or sell recommendation, or just a moment. Yeah, buy or sell recommendation, or it is not any like kind of advisory. So consider it as a research and learning purpose only. All right. So let's quickly get into the chart. So I'm live in YouTube and also in Discord. So I'll be looking into your questions. So you can use the live chat option in in YT YouTube, and you can also use the chat option to interact with me using the, if you are in a Discord, so you can use that option to interact with me. All right. So let's quickly get into the subject. A quick recap. So basically today what we are going to discuss. Today I have considered few of the indicators which are offered by Bookmap India to discuss. So basically in that, the main indicators like absorption and footprint, and also one of the recently introduced indicator which is called market pulse. I am going to explain about that particular tool as well. All right. So definitely this is going to be an interesting session. So let's quickly get into the subject. Just a moment. Just give me a moment. Just a moment. Yeah. So basically, before we jump into the concepts of order flow or footprint, we go by a framework. Okay. So to give you a basic perspective about it, just a moment. Just a moment. Yeah. So it's called as TLE. This is a basic framework that I personally use in my trade. So basically T means trend, okay, and L means location, E means entry and exit. This is how we go step by step in terms of the overall analysis. So first thing is to understand what exactly trend is all about. Trend is basically, in simple words, is like whether the primarily market is moving in upward direction or downward direction, or it is moving in a sideways direction. So basically we are going to define the primary direction of the market in the first place, which we call it as a trend. All right. So if the market is making higher high and higher low in terms of the overall price chart, I mean to say, so in that case we can define this, that the primarily market is primarily moving in upward direction. In that, we look for long opportunities. This is point one. And if market is making lower lows and lower highs consistently, that definitely indicates a downtrend. In that case, we can look for shorting opportunities. And third thing is that if the market is going nowhere, that is exactly the present situation in Nifty. All right. So in that case, we're going to define it as a sideways direction, and we can deploy buy low and sell high strategies. That's the beauty of defining the trend in the first place itself, that we are clearly defining the primary trend so that we can align with the trend and we don't unnecessarily take any particular trades against to the trend. That is the idea behind it. And second important thing is the location. Location means we have defined the trend, but if we want to align to the trend, where we want to get into our trade, so we cannot randomly get in and randomly get out of the trades. So there has to be a system, right? So there has to be the locations in which we can monitor the price action and order flow, and then we can take a decisions. Like for example, immediate support and resistance, like what you are seeing right now. immediate support and resistances, previous day high, previous day low, or even the, if you are an intraday trader, the first 1 hour completion, after that the range will be there, right? So we can call it as an initial balance range. So that range high and low will also be the reference levels for us to monitor the price action and also order flow. So that's the second step. Once after that, then comes the last stage where we look for entry and exit using the Bookmap different indicators. So I will be explaining about that in the coming chapter. All right. So first thing is to define the trend. If this entire framework is clear, then we can really then we can look for this particular framework in today's market, or basically the present structure of the market. So let me delete this. So it is clearly visible that I have already marked here, right? So this particular range, market is presently moving within this particular range. If you observe this, so presently there is a structure that is being forming as a sideways market. That means we have an opportunity to get into the trade when market approaches to the lower level, that is a support level, and the resistance level. If market approaches to this particular level, we can look for shorting opportunities. So the present structure of the market is moving in sideways, and hence we can deploy the buy low sell high strategies. So how to get into that, definitely I will be discussing about that point, but try to understand the context. That's the first thing. All right, so just a moment. All right. So I hope this is clear. So first thing is to identify the trend in terms of that. This is a Nifty chart that we are looking, and we are looking in terms of the 30-minute chart, because our framework is our entire trend structure itself is a very short term. Then we are looking for in 30-minute time frame. All right. So in that case, 30-minute time frame, it is clearly saying that in terms of the overall trend, it is presently sideways, and we can look for the buy low sell high strategies. All right. So we don't look for a random trades, but possibility of market. This is one of the critical information when it comes to the overall price action. So listen to me carefully. When this particular structure, all right, so this is like a reading price action pattern. So basically what is happening here is that after market approach to this particular level, there was a pullback. All right. So just a moment. When market approached to this particular level, there was a pullback, but market is again taking a reversal, and it is moving in a downward direction before even reaching this high. All right. That clearly shows that the buyers who are entering from this lower level are weaker comparing to the sellers. That's the reason why price is not approaching to this high. Before that only this is getting a rejection. All right. So in that case, at the present moment, the overall context says that even though market is sideways, our bias is still downwards, or we can look for shorting opportunities, either break of this level, or when price approaches to, again if price approaches to this particular level, and again if it gives a signal, then also we can look for shorting opportunities by targeting this support and this support. So if we are getting a breakout opportunity here, price breaking this, and the possibility of sustaining this price below this particular support level is quite high. All right. This is the context understanding in terms of the Nifty. Let's understand the same thing with respect to the Bank Nifty. All right. So again, in terms of the Bank Nifty, so let me delete this. Just a minute. Yeah. So even in Bank Nifty, the structure is clearly present that present situation market is staying in sideways market. We can clearly see that this is basically the lower zone of the market, which is a kind of a demand zone. This is a supply zone, and clearly it is respecting, and presently price is trading within this particular range. All right. So the similar context applies here. We can look for shorting opportunities when price approaches to the higher level, and we can look for buying opportunities when price approaches to the lower level around 42,000 level. But comparing to the Nifty, Bank Nifty is clearly in a sideways trend. Why? Because the pullback that we have seen from this particular level is clearly approached to the last resistance. Again, in this particular case, it approaches to the last resistance, and again it is falling back. So it is a typical behavior of the sideways trend, but in Nifty we are little biased towards negative direction, because the buying strength that we have seen, the buying pullback was not strong enough to reach the last resistance. So if this is clear to you, then we can move on to the next step, which is identifying the, first thing is we have identified the trend. In both of the cases it is sideways, and then the second step is to identify the locations, that means the immediate support and resistance which can play the major role when it comes to the part of price action. All right, so I have already mentioned that the present high, which is 42,802, around 42,800 level, and 42,000 level, yeah, 42,000 level is going to play the very critical role in terms of the bank Nifty. Until the price sustains within this particular level, we can simply strategy. So when price approaches to here, and if it gives a positive signal, then we can look for buying opportunity by targeting the higher level. And similar goes if market approaching to this particular level, then we can look for shorting opportunities by targeting the lower level. It's as simple as that. And similarly, when it comes to, just a moment, yeah, so 18,090 is one of the level that we can monitor. And as I said, in terms of the Nifty, we are little biased towards short, and definitely in that case, if we even get an opportunity at around 18,090 to short for next day market tomorrow, so then we can look for shorting opportunities, or anything that break up this particular level, break up the lower level, or the false break, or when price approaches to the level and we get the short signal, we can also look for shorting opportunities in terms of the Nifty. All right, so if this is clear to you, then we are moving on to the third step. That is where we're going to flow and footprint information using the bookmap chart. All right, so as you can see, there are many indicators that are involved. So let me disable all the information and show you a step-by-step process. All right, so just a moment. Yeah, so in this case I have enabled, yeah, so I have disabled all the information, and presently what you are seeing, the red and green lines are nothing but the best bid offer, best bid and best offer. So at any given point of time, if you open a depth, right, depth of an instrument, you will be able to see 5 best bids in the present market situation. So in that case, this blue and this green and red line indicates the present available best bid and best offer. All right, this is not an executed price. This we call it as a BBO indicator, best bid and best offer price, which shows the structure within the candle. Okay, so also we can get to see using this particular chart. So what's the use of it? All right, when it comes to the candle, always we have a delay of the time frame that we have selected. If we have selected 5-minute candlestick chart, so you can only take decisions after completion of the 5-minute. But when it comes to this particular indicator, since it shows the structure within the candle, we can get into the trade or get out of the trade even before completion of the candlestick charts. That is the beauty of this indicator. So smartly the software stores the historical data, and it forms the structure within the candle. So this we call it as a BBO indicator. This is a bare minimum indicator. The moment you install the software, so you'll be able to see this particular information. All right, and let me disable the candlestick. The next thing that I want to introduce you is the volume dots. All right, so what exactly it is? You are already seeing that the some bubbles are showing as a green color, some bubbles are in a red color. So in simple words, it's nothing but the aggressive buyers and aggressive sellers presence. What I mean to say, always in market there are two kind of orders. One is aggressive order, one is a passive order. Okay, so in simple words, aggressive order is where the people places a market order. So who are in a hurry, so who want to get into the trade or get out of the trade aggressively, so they place a market order. But opposite to that, there will be a passive order in terms of the limit order, we can say. So in that case, the information that we are seeing here is a completed order, point one, and point two, it is also showing what kind of activity was there, whether they were a market buy orders or market sell orders. So we can clearly see here, this was green, this was red. So at the lower level, there was more aggressive sellers. I mean, there was more selling volume and aggressive selling volume or market sell order placed. And here the market buy orders placed. Okay, point one. And point two, we can also relatively differentiate. For example, let's say this is also a green bubble, this is also a green bubble. But if you compare both, we can differentiate relatively, we can differentiate that where the maximum number of orders have taken place. So in this case, in two of this case, this is where we are seeing a maximum number of orders got executed, and also at the same time it is a aggressive buying orders. All right, don't worry how to use this information, what is the use case of it or application of it, so I'll be explaining it in the upcoming slides. All right, so this is, we call it as a bubble. Okay, so you can control the parameter of the bubble here, so size of the bubble, all right, and transparency of the bubble, so that you can control it from these two information. All right, there is one more indicator. VWAP is a basic indicator that I regularly use. I think most of the intraday traders use this particular tool. All right, so which is nothing but the volume weighted average price, which shows the average price considering the volumes. All right, so definitely it is one of the significant tool to look for any mean reversion kind of setup. For example, let's say if you are looking for a short, so if price approaches to this particular VWAP level, so obviously most of the people will be interested to look for shorting opportunities. So there is also one of the way that you can look that if the price is sustaining below VWAP, then that shows the negative bias. If the price is surviving or sustaining above the VWAP, then that indicates a positive, positive impact or positive bias. All right. So this is a basic indicator that we use. All right. So now comes the third indicator that I wanted to add, which is absorption indicator. All right, so by default you will not be able to see this information, so you have to go through the, I think, bookmap.com. Sorry, just a moment. Yeah, you have to visit the bookmap.com. What's showing in just a moment, it's in Hindi. Yeah, so I'll share the link to download the absorption indicator later. So I think there is some work going on in terms of the website. All right, so you have to download it and you have to add it. So for example, I have downloaded all the indicators from the website bookmap.com, and you can add these indicators in this particular add-on list, and after adding this you will get the access to all the information of this indicator. All right, so just a moment. So if you visit the absorption indicator, right now I have enabled it. Okay, so it is a condition where within 2.5 seconds, this is the default setting, I haven't changed anything over here. So 2.5 seconds 5,000 quantities got executed. So this is a manual number that I have placed. So for example, I can change it to 6,000. So the software considers the price level where within 2.5 seconds 6,000 quantities got executed, so that it considers it as an absorption. Okay, so what it means to say is that if the price is, for example, let's say if the price is moving upward direction and suddenly there is a change and there is a bigger volume placed within 2.5 seconds and market reversed from that particular level, so obviously even though there is an aggressive buy, okay, so someone is placing a aggressive buy orders within 2.5 seconds and price is still falling down, that means the one who placed aggressive buy orders, the more aggressive buy orders, was consumed by a limit order. All right, so that's the reason we are seeing, instead of market if they are strong aggressive buyers, market would have moved in the upward direction, but that's not happening over there. Price is retracing, so in that case we can call it as an absorption. The only difference is that the difference of 2.5 seconds, so within a fraction of seconds maximum number of orders are getting placed and at the same time they are getting consumed. That's why the software consider it as absorption. All right, so in this case, for example, in this case 32300 quantities got executed at this particular price level, and it is showing it as a presence of a passive seller. That means the market order got placed here, 32,300 quantities got placed within 2.5 seconds, they got consumed. And the beauty of absorption indicator is that whenever Whenever there is a presence of absorption, most of the cases we identify it as a swing. For example, let's say here there was an aggressive buy, here there was presence of limit buyers, and after that we saw the swing. All right, and after that we saw the presence of passive sellers, that means absorption in terms of the selling, and then market reversed. And similarly, that you can clearly notice whenever we see the absorption, and most importantly it happens in the real time. All right, so when this happens, it indicates a presence of passive buyers or passive sellers. So we can utilize it in two ways. I will discuss that. First, let's discuss about the setting part. All right, here the second information is that automatic mode. Right now we are controlling this quantities in terms of the manual setting, but we don't want, or we don't want to involve manually. So that's the reason why there is an automatic mode given. So how does it work? So presently we are looking at 30-minute chart. That means the past 30-minute data we look for point one, and then there is a multiplier. So how it works is that in the last 30-minute chart, assume that the average buy orders were 10. Okay, so the 10 quantities multiplied by the multiplier that you have selected. So 10 multiplied by 5, how much? 50. So that 50 quantity will be inputted to this particular number. Alright, so that will be automatically happening. That happens automatically, and most of the cases I use it in automatic mode by 5 multiplier 30 minutes. So if you are completed, like for example our market opens at 9:15, so after 9:45 you can use this particular information. So if you are within 9:45, you can reduce the time frame. All right, so for example, if you are looking the market after 9:30, so only 15 minutes has completed, so in that case you can look back the last 15 minutes. The advantage of keeping this particular setting in automatic mode is that it works according to the market dynamics. All right, we don't know, we can also manually control this parameter, but we don't know the dynamics of the market. So for one day, so there will be 6,000 quantities is a bigger number, but for some other day it may be a lesser number according to that day structure at that day particular information. So when we keep it as an automatic mode, so it happens, or the numbers will be calculated based on the present day or that particular day's changes or dynamics. All right, so that's the reason we keep it in automatic mode. You can also control this manually. All right, now the question is how we can utilize this particular indicator, right? So that is what is the use case of it? That is an important question, right? So there are two ways you can utilize this. First is to identify the valuable swings. What I mean to say, for example, there are, if you observe the BBO indicator, there are so many, so many structure, all right, so many kind of movements. But when you add the absorption indicator, you can filter out many unnecessary swings within the BBO indicator. For example, we can clearly see when we have an absorption indicator, this is where we have the swing high, this is where we have the swing low, this is where we have a swing high, and this is where we have the swing low, swing high. All right, so this is where we have the swing low and swing high. So the swing of the BBO indicator can be effectively differentiated using the absorption indicator, point one, and point two, we can use it for entry and exit both. So how? Again, let's go back to the context, initial context, so that in which way you are looking for the trade, whether you are looking for a long trade, short trade, or a sideways trade. For example, considering today's market, assume that you are looking for a shorting opportunity. All right, so shorting opportunity means we need to, for example, let's say if you are a price action trader, or if you know a little bit of the price action, so basically when we are looking for a shorting opportunities, either we can look for the break of swing. All right, so we can simply use the BBO indicator to identify this particular structure, and absorption indicator to differentiate the significant swings. All right, so in this case, as I already explained, this is where we have a swing low, this is where we have the swing low, and this is where we have the swing high. So if you are considering that you are looking for a shorting opportunities, we can simply look for shorting at this particular low or this particular low. All right, where we can keep our stop loss. Again, the same thing, we can keep the stop loss to the last swings. All right, as in when price continues to trade in this particular pattern, we can simply trial our stop loss. For example, assume that your trade got executed this particular stage and price continued in your direction, you can simply trial your stop loss to the last swings. All right, so this is where your stop loss got triggered, and again this is where again we got the shorting opportunity again. So basically Absorption indicator can be used to effectively differentiate the significant swings within the BBO indicator. Point 1 and point 2, we can also use this to enter and exit, and also trailing stop loss. For example, the price is in your favor, right? So price is moving in your favor and continuously there is an absorption happening at the higher end. So you can simply trial your stop loss to the absorptions level. All right. That is also one of the way that you can use the absorption indicator. By any chance, if you have any particular questions, kindly mention them in the live chat. Yeah, I'll be observing them. All right. So just a moment. So I hope usage of absorption indicator is clear. Then one more indicator, as I said, the recently introduced information, that is a market pulse. Okay, so this is also one of the interesting indicator that's very recently we have introduced, and I think until 30 of Jan you can use this particular indicator for free by visiting. You can visit bookmap.truedata.in. Presently, I'm using the Bookmap India Pro version. All right, in that you can get the market pulse indicator, so you can use this particular add-on. Okay, so it's basically the add-on which is available free for pro users till 30th of the Jan, so you can try it out later. Want to introduce other algorithms as well. Presently we have a volume pressure. Don't worry, I will explain about it. So if you know click on this I button, you'll be able to see what is volume pressure. The volume pressure algorithm can be used with any instrument based on the trading volume events for a certain period. It shows the current sellers and buyers. You can see current sellers and buyers pressure, historical value. Sorry, just a moment. Just give me a moment. Yeah, value is visualized within the subchart. Okay, so don't worry about it. How to use it, I will let you know that. So if you open the widget, okay, so if you expand the widget, there are so many settings. Okay, so in simple words, the threshold, okay, what volume pressure does is at any given point of time there will be a market buy orders, there will be a market sell orders. The continuous flux of the orders will be placing in the markets. All right, so what this particular algo does is that it looks for the pressure within the buyers and sellers. Okay, for example, the instrument that I have selected is Nifty. Okay, presently this particular instrument only I have selected here. There is an option called as threshold. Okay, so there is a certain threshold. This is a percentage value. Right now it is set to 70. Okay, more the threshold that you set, lesser the signals that you get. Lesser the threshold, more the signals. So by default I am not changing anything, so 70 is the by default setting. And there is one more setting that you have to change, is half life period. So what exactly it means, that for example sorry, for example, let's say if the average order is 100 quantities, like for example in this case the training period, right? The training period is very important. After that we move on to the half life period. So what is training period? Basically the look back period, like we see any particular indicator like 5 minute, 15 minutes. So in this case I have selected it as 5 minute. Okay, that means the algo will consider last 5 minute information to calculate the data. Point 1. And the half life period is 10 seconds, so we can keep it as for Indian markets we can use it as 30 seconds. That's the preferred value. What it means is that for every 30 minute, for every 30 second, right, so software will calculate the dynamics of the market, dynamics of the volumes, and then consider the calculations. All right, 5 minute is the training period, that's the look back period, and within that every 30 second the order will be considering the dynamics of the changes of the volume. All right, so if you play the show widget button, okay, the moment you press on this, first thing is that you will get this particular chart. This we call it as a sub chart. Okay, the chart that you are seeing in the lower end is basically the sub chart. Whenever this threshold met, all right, so for example you can see this is where the buying threshold met. What it means in simple words, more of the buying presence, aggressive buying presence has seen in this particular level. The similar goes to the selling as well. More of the selling presence seen at this particular level. Okay, so if it is white, that means there is no volume pressure. I mean there is no much of an activity. All right. So whenever it crosses the threshold, which is the 70% threshold, automatically that will be recorded as the volume pressure. And in simple words, it indicates that there were more active aggressive buyers at that specific point of time. All right. So we can clearly see that you can change this particular setting and see how this subchart looks like. Okay. So if you increase it to 80, okay, and apply, so the setting will be changed. All right. So as I said, more the threshold, okay, so lesser the signals. How we can use this information? So this is also one of the critical information that we want to look for. So I want to keep it as 70 only. I'm not changing anything over here. All right. Half life period as 30 seconds and training period as 15 minutes. If you again, it goes the same with this thing as well. If you train it for last 30 minutes, the signals will be lesser or fewer. So just a moment. So at the present moment, 5 minutes is what we are selecting. All right. So more the number, more the time that you look for, lesser the signals you will get. Just a moment. The question is how we can use this information. This is a wonderful tool to identify the volume differentiation and volume pressure. So how it works? Let me show you an example. Just a moment. The market pulse indicator or the subchart of the market pulse indicator will help us to identify the price locations where the price difference is seen in terms of the price difference is seen, and also at the same time volume difference. So just a moment, just give me a moment. Yeah, yeah, this is the classic example of it. So for example, okay, listen to me carefully. At this area, all right, we are seeing two times, or basically more of the aggressive sellers presence. But if you carefully observe, there is no aggressive buyers at all right. Is there a pressure, volume pressure difference? Yes, there is a difference, and at the same time there is no buyers presence. Most of them are the market sellers, all right, at this particular zone. So what it indicates, so if we are seeing this particular difference at a specific price level, for example, assume, okay, this is an example, there were a support, okay, there was a support, and we are seeing more of aggressive sellers presence without present of aggressive buyers. It clearly shows that someone is smartly consuming the market sell orders as a limit buy orders. I'll repeat it. Assume that there was a support and we are seeing a volume pressure, and we are seeing only the presence of aggressive sellers, not the presence of aggressive buyers. So that clearly indicates someone is passively consuming those orders, those market sell orders, and possibility of market reversal from this support is quite high. Okay. Let me give another example. Let's take an example of a buying order now. Yeah, just a moment. So this is one of the classical example. Okay, so what happened here was that there was more of an aggressive buyers. Okay, there was more of an aggressive buyers when price approaches to this particular level, and after that, if you just look at the overall presence of aggressive sellers, there was not much of an aggressive sellers. There are, I think, 2 to 3 times there was a presence of aggressive buyers, but price is not moving in the upward direction. All right. So if the buyers aggressively who entered the market, if they were strong, the price has to survive above, right, survive in the upward direction, but which was not happening. Instead, market was moving in the downward direction. All right. So that's the critical information that we get from market pulse indicator. It shows the presence of aggressive buyers and sellers only at a specific condition. So that is where the volume threshold met. All right. And it shows the difference between overall market buy orders and market sell orders. So in this case, assume this is also one of the example. Okay, so at this particular zone, there was a presence of aggressive sellers, but at the same time there was not much of a presence in terms of the aggressive buying. What it indicates, so again, if there was a support, okay, this is an example, if there was a support, and if this particular condition is happening, then the trap of this aggressive sellers is quite high, and possibility of market moving in the opposite direction and moving in the upward direction is also quite high. That's the use case of the market pulse indicator. All right, so I hope this is clear. If you have any particular questions, please make sure to comment them in the live chat option, so I'll be reading your comments. Yeah, this particular indicator is available at no cost to everyone until January 31st, 2023. You can check this. You can download it and check this in the live market. And most importantly, right now I will not be able to show you that. If you visit the market pulse indicator, there is also a volume control that you have seen, right? So it basically means that wherever this threshold met, automatically the sounds will be given. So you can control this you know, these all the sounds which are there for if there is a buying threshold met, so in that case it gives a pop-up in terms of the volume, so that volume you can control here. And similarly, there is a widget as well. You can see I'm moving now, so this widget shows the live dynamics of the volumes. For example, let's say the white line that you are seeing over here, right? So just a moment. Yeah, the white line that you are seeing here is a threshold line that changes according to the threshold that you have put. So 70% threshold means 70% threshold line will be kept here. So whenever the order will be popping in the live condition, and when it crosses the threshold line, so that will be considered as a condition. You will get the sound alert. And one more thing is that we will also be able to see the sub chart, where you will see the clear difference between the presence of aggressive sellers and buyers. So you have to look for a condition where there is no one there is a missing of one particular player. So this is a classic example. All right, so there was no buying aggressive buying presence, but instead there was more aggressive sellers presence. So if this happens at a critical place, critical locations, then definitely it is one of the critical information for us to look for when it comes to the order flow. So this is a order flow information only, but in a different visuals or graphical situations. So I hope this is clear. All right, you can use this particular indicator for free, so it is available till 31st March. That's one of the indicator. All right, so let's check out Bank Nifty as well. Just a moment. Yeah, just a moment. So for Bank Nifty also I will enable the absorption indicator. And similar setting goes here. If within 2.5 seconds, that's the default setting. And if within that last 30 minutes is the look back period, again we are using the automatic mode version. All right. Yeah. Sorry. So again, add market pulse indicator for this as well. The beauty of this indicator is that you can monitor multiple instruments at the same time. For example, if I create one more indicator over here, volume pressure, instead of Nifty, I would like to keep it as Bank Nifty, and threshold and everything is same. Half life period and 5 minute. Again, if I click on play, all right, so it will automatically calculate and it shows the sub chart. Okay, so just a moment. Just a moment. Yeah. Yeah. So this is the condition I wanted to show you. So for example, price is approaching to the VWAP. Okay, price is approaching to the VWAP, and we are seeing more of an aggressive buyers. At the same time, there was not a presence of aggressive sellers. All right. So that shows someone is placing market orders aggressively in terms of the buying side, but there was no much of an activity in terms of the sellers, market sell orders. So those orders got consumed, and again, consider that you are looking for a shorting opportunities. This condition is a wonderful opportunity for us to look for a short. So in this case, market was approaching to the VWAP, and we saw the presence of aggressive buyers, but not the presence of aggressive sellers. So there is a difference, and we can look for shorting opportunities at that time. All right. Well, there is a question from PlayPal. What is the accuracy of this indicator? Well, any particular indicator that I have discussed so far, that goes with the context. All right. So accuracy depends on how much, how many number of trades that you take, and basically what is the context that you are trading with. So that defines the accuracy. The most important question for me, instead of accuracy, okay, so accuracy is one part, but what will be the reward, that also has to be considered. When it comes to trading, accuracy plays a critical role. I'm not saying that that accuracy is not everything. Accuracy is everything, but at the same time you also have to consider the risk to reward ratio. All right. For example, let's say you are winning 9 out of 10, 90% accuracy, 9 times you are gaining only 2 rupees. But when you are losing in one trade, assume that you are losing 25-30 rupees. So what is the use of accuracy? All right. So the risk to reward and also the win rate, that has to go hand in hand to be consistently profitable in trading. All right. So I hope that is clear. And there is one more question. Yeah. So is this clear? Again, I'm about to recall, and then I will move on to the Q&A. Just a moment. Okay. Okay, so there is a question. Sorry, I missed it in Discord. So just a moment. Yeah. Need to know is essentially the absorption indicator confirms true support and resistance within the current time frame. Is that correct? Yes, definitely. That's correct. And how to set the market open and close time for Nifty instruments so the charts does not keep scrolling automatically to the right with null data after the market close at 3:30. All right. So by default, there is not that particular option at the present moment. So basically, when you subscribe to an instrument, right? When you subscribe, for example, I have clicked on the plus and subscribing now TrueData, and then during that time you have selected all historical data 24 hours, right? So this you can reduce. So in terms of that, for example, let's say right now I have selected as 24 hours, that means around one day. Okay, so you can maximum use it as a 60-hour time period to reduce that flickering. So you cannot change this, since this particular indicator is designed for 24 hours market. So this will be fluctuating. We cannot set the open and close, and after that we will not be able to see. No, that's not the case at the present moment. So the ticks will be running all the time because it is a real time information. So make sure that you use the lesser time period when you are subscribing to the instrument itself. All right. The historical data has to be lesser. In that case, there will not be much of a pain. All right. So I hope that is clear. Let's add the crude oil data. 24 hours, last 36 hours I want to add. Tick size as 1. All right, tick size as 1, and let's subscribe to this. I think it should be available to, we will be able to see the live ticks itself. So just give me a moment. It's getting loaded. ticks are getting loaded. Just a moment. Yeah, there is one more adding point from Shubhani Sheikh. So for accuracy, but it depends on the focus and waiting for right opportunity. That's why we use the framework. Okay, so we don't take a random decisions. We have a particular framework or a process to follow. So initially we identified the context of the market, then we identified right locations to get in and get out of the trades. That is basically identifying the support and resistance. Then we look for the confirmation in the bookmap chart using the BBO indicator. That's basically the structure indicator that is showing best bid and best offer lines, and volume dots also we can use, and also absorption indicator to filter out the valuable swing high swing lows, and then we can get into the trades based on the structure that we are seeing in the BBO indicator. So there is an option to enable the footprint chart. Okay, so you can see here that there is a footprint chart. Okay, which shows the delta information. So let me zoom in a bit and show you the information. Just a moment. So let me disable the candlestick charts, and yeah. So now you can see it has loaded. This is nothing but the delta information that we are seeing in terms of the time frame. So for example, let's say the footprint. All right. In that case, we are looking for a 15-minute footprint chart. Point one. Point two, we are looking for a delta positive and negative. What it means to say that in this case, all right. So just a moment. So in this case, we can see the volume profile. So we can clearly see here, this is a kind of a volume profile that we are seeing in this entire 15-minute chart. All right. And most importantly, we will be able to see where the maximum number of orders are getting placed. For example, in this case, this is where we are seeing maximum number of orders getting placed. And third important information is who were in control at that particular stage. So more of aggressive selling orders got placed at this particular price level. All right. So in that case, how we can use this delta information? For example, assume that there is a resistance. Okay, there is a resistance, and we are seeing the footprint charts. So basically the delta footprint charts, and we are seeing more of number of orders are getting placed above the resistance. But assume they were a market buy orders. Okay, so if it was a market buy orders, then that's a caution sign for us. We have to look for the price follow up. Assume if the market is sustaining above this particular level post after forming of this particular information, then that's a good sign. We can look for a breakout opportunity and we can look for long trade. But in most of the cases, if this happens, price again retraces back. That is an indication, or that's a validation point for us to get the confirmation on the false break. So assume that you are looking for a shorting opportunity, and when price approaches to this level and you are seeing more of the delta activity and the buying delta activity. Okay, so and price is falling down, in that particular case also you can look for shorting opportunity based on the BBO indicators pattern. For example, in this case, let's say this particular pattern happened, and after that the price is falling down, and if there will be a short pullbacks, right? So when there will be a short pullback, we can look for the break of last swing to get into the short trade. Or if you are looking for a long trade opportunity, okay, so even though this particular information happens, or in some cases, in few cases, you will get to see the aggressive sellers as well after resistance. In that particular, that's most of the cases, that's the confirmation of the you know uh, breakout. All right. It will not happen in most of the cases. Most of the cases we will see the aggressive buyers presence only. But if we are seeing an aggressive sellers presence above the resistance, that's a good sign to look for long opportunities. That indicates or that gives a validation of the breakout. So that's about it in terms of the delta information. All right. You can use this. Just a moment. Yeah, you can change this visual graphics to whichever the way you want. So you can change, right now it is in histogram delta plus minus that I love to use. You can change this to just a moment. Yeah, histogram buy and sell. So basically a full background color, full. Let's try it out with the NSC crude oil. Okay, someone is saying explain the market pulse indicator one more time. So let me give you a quick information about it. All right. So just a moment. So I strongly suggest you to visit this particular website. All right. So this bookmap.com knowledge base docs add-ons and market pulse. In this, you'll be able to see the text information. So for a quick setting, all right. Right now, this indicates a instrument that we have selected, Nifty. Volume pressure is the present available information in the market pulse. 70 in terms of that 70%. For example, last 5 minutes, okay, the training period is basically nothing but the look back period. Last 5 minutes you're looking for calculation of the volume information. In that, the average volume, okay, so average volume, assume that it is 5, okay, or 10, okay. In that particular case, at any given point of time, there is 7 orders placed. In that case, it will be considered as a threshold. So the volume has met the threshold of the average volume, so that will be considered as a threshold, and it will show for both buyers and sellers. Okay, so for example, if I play it, all right, we will be able to see the sub chart in the lower section. Okay, this is a sub chart. Right now we are able to see the buyer and sellers percentage, and wherever we see the 70 percentage scenario, for example, in this case the buyers volume crossed 70 percentage of the average volume in terms of the 5 minute training period. So similar goes with the sellers as well. If it is happening more than 70%, this is where the threshold of selling met. So that's why it is showing in a red color. So we have to look for a condition where the difference between the presence of buyers are there, the threshold of buyers met, but threshold of sellers is not meeting. So for example, let's say in this case there was no buying present, there was no buying threshold met, but wherein we are seeing more of the aggressive sellers over here. All right. So as you can see, in this case, we are seeing more of an aggressive sellers, but not an aggressive buyers, and there was immediate reversal. So that's the condition we can look for. That is one of the way of using it. Or in simple words, it basically indicates the presence, the aggressive presence of an aggressive buyers or aggressive sellers. All right. So if one is missing, definitely there is something happening. More of the activities are happening, but there is something else is happening. In that particular case, we can use that particular information to have the clarity in terms of the. Just give me a minute. Sorry guys, I have a cold today, so I'm really sorry. Yeah. So for example, okay, so let me give an example. Assume there is a support line. Okay, so price has approached to this particular level. We are seeing more of an aggressive sellers. Okay, people are aggressively selling. Market sell orders are there, but price is reversing. Okay, so the buyer's presence is not there. Aggressive buyers were not there. Only aggressive sellers were there. That means what? So these aggressive sellers, market orders got consumed by other player. So there has to be the limit order, right? So they consumed that particular orders. So reversal of the market from this particular level is quite high. That's basically the indication of this particular indicator. All right. I hope that is clear. Okay, so there is one more question from Shubek. So just a moment. So he's asking whether we have a cumulative delta. Yes, definitely we have. So just a moment. Let me show that to you. So if you visit studies and configuration, so you'll be able to see the cumulative volume delta. Okay. So this is a line that indicates a cumulative volume delta. Okay, it will give the confidence to stay with the trade. Correct me if I am wrong. Yes, definitely. So it indicates the presence of aggressive sellers throughout this particular period. From this, we are seeing until this point, there was more of an aggressive selling presence. So we can see that aggressive selling activity has reduced from this stage. From this stage, aggressive selling activity has reduced. So we can use cumulative volume delta in two ways. First thing is to identify the trend, which is basic thing that you can see in the software itself. If the cumulative volume driving are sustaining above zero, then we can identify that particular trend as positive trend. If it is sustaining below zero, all right, below zero, then we can identify it as a negative trend. So in this case, from around this particular point, the selling trend has started, or the negative trend has started in terms of the cumulative volume delta. And similarly, we can use, there is one more way of using the cumulative delta is basically the divergence. What I mean to say, for example, this is a theoretical example. Okay, so assume that market was falling. Okay, so when market made the last lower low, all right, so it is similar to like RSI divergence that we look for, right? So when price is falling, but the cumulative volume delta is increasing, cumulative volume is making a divergence, so that is a strong indication of the price reversal. The possibility of price reversal from the low is quite high. So it is similar to RSI. Basically the logic behind it is very simple. Price is falling, but the volume behavior, so the overall volumes are decreasing. So there is a negative correlation between the price movement and the volume behavior. So in that case, we can look for the mean reversal trade, or kind of a reversal trade as well. All right, that's how we can use cumulative volume delta. I hope that is clear. So if you have any particular question, feel free to ask them. I'll be happy to answer. Just a moment. Just give me a moment. Okay, so I think someone is asking a crude oil information. Just give me a moment. I'll try to get it. Just a moment. Most welcome, Shubhani. So how many of you are using Bookmap Pro version already? So if you are, so please check the market pulse indicator, which is available to test out free for I think around till 31st Jan. Just a moment. Yeah, cool. Give me a moment. So if you have any particular questions, feel free to ask. Crude oil, I will check, and I will try to consider it in the next session. All right. So it will be very helpful to check that in the live session. So I don't know why This is presently not working in my PC, so I will check that particular information and get back to you in the group. So if you, by any chance, if you're not in the Discord group, you can join the Discord group as well, the Bookmap Discord group. So there will be a live discussion. You can also interact with me and other traders who are actively trading the markets using the Bookmap tools. All right, great. Yeah. Bookmap will get back to you on it. So Bookmap have shared a link, the Discord link in the live chat option. You can use that and also join the Discord group. All right. Well, just a moment. Yeah. Any other questions with respect to today's discussion? Cool. Well, so thank you so much for your time, and keep attending the sessions every week. On Monday and Friday, we will be having a session alternatively. So you can attend those sessions to get the clarity. And next session, I think the you will get the information in both Discord and as well as the YouTube. So stay tuned, and thank you so much for your wonderful time. See you in the next session. Until then, take care. Bye bye.